Welcome to another episode of Counting on Chazin. I'm really excited to have one of our great friends back with us, Jackie McLaughlin, CPA, Quality Control and Learning Manager with Chazin and Company. Jackie, I say this every time we're together. I always learn so much from you, as I do with all of the brain trust. I will call you all the brain trust of Chazin and Company. Um, but this one is an interesting topic because we're going to be exploring top accounting questions that board members should be asking. And I think there's a little bit of emotion that gets into this. There's the intellectual side, but there's the emotional side. So I can't wait to have you really help us understand why we need to be thinking about this. Again, I'm Julia Patrick, CEO of the American Nonprofit Academy. Okay, Jackie, tell me what you are seeing. Are we asking questions or are we not? Not enough? What is it looking like from the boardroom?
It depends. The infamous tax preparer answer to everything. It depends.
It depends.
It depends on the board. Some boards are more actively engaged than others and ask more questions, and others just sit back and listen to what the ED, the executive director, has to say.
Yeah, yeah.
So
It's kind of a cultural thing, isn't it? You know, the culture of the board. If the board's really engaged and encouraged to ask questions, it seems like they do more. Or do you think it's more personality driven?
I think probably both, but I have a really good story about not asking questions. So, being a CPA, I did a deep dive into the Enron collapse. So, for younger people who might be watching, that was a huge game changer. I believe it was around 2001. At the time, it was the largest bankruptcy. And the accountants at Enron were doing just a lot of weird things that weren't necessarily correct. At the time, their audit firm was Arthur Andersen, who was, in audit speak, the Titanic of the audit world. They had been around forever. They couldn't sink. They went down with Enron. They no longer exist because of it. And the key point to this story is that when everything came out, how did this happen? The reason Enron happened is because nobody wanted to say, I don't understand that. What are you doing?
Wow. Okay.
Yeah.
That's amazing.
Yeah.
Um, Certainly a pivotal piece of American business history because it changed a lot of legislation. It changed the way we do things. It collapsed some major institutions, to your point,
Mm-hmm.
that reverberated, or I would argue, are still reverberating across the business landscape.
Yeah. Yes.
So, as part and parcel to this, there's something called fiduciary responsibility. And we hear that a lot, but I don't know if we always know what it means. And if you could help start us there to kind of frame up I'm going to call this the don't. It's because this is a serious part. This is why we have to be thinking about what are the questions we're going to ask. So launch us into fiduciary responsibility.
I love this topic passionately. And I
Okay.
passionately love this topic because it's very confusing to people. They don't understand. What does that mean? I have a fiduciary responsibility. And here's what it means. It means you're a parent. So if you are a parent or you know parents, you know that parents make decisions in their everyday life with only one question in their mind. Will this benefit my child or children?
Yeah.
How will the decision I'm making impact my children? And am I making a decision that is in the best interest of my children, regardless of me? So maybe that means, and I'm making this up, maybe that means you have an opportunity for a wonderful job in another state, but you have a child in high school. And so maybe you decide as that parent, I'm going to forfeit that job because I don't want to move my child out of their high school.
Right.
You have sacrificed what's good for you for the greater good of your child in that example.
Yeah.
And that's what fiduciary responsibility is all about, particularly for board members. So when a person becomes a member of the board of a nonprofit organization, the nonprofit is their child. And every decision they make has to be in the best interest of the nonprofit.
Mm-hmm.
This can cause conflict. So let me give you a real life example. I used to work for a nonprofit organization with the board, obviously. And there was a member of the board who was a financial planner. And he wanted the board to invest, or he wanted the organization to invest a significant amount of money into an investment vehicle that's known to be not a great investment vehicle.
Okay.
But him as a financial planner or a broker, he loved this product because it paid him large amounts of commissions. And so he tried to steamroll his way through this and bring in the paperwork and tell me to sign it so that we would invest this in this particular vehicle.
Wow.
As the CFO, I said, well, this is all nice, but this isn't my call. It needs to be run by the board, and I'm not signing this. If the board wants to do this, I will sign it, but they need to make this decision, or the investment committee. Mm-hmm. So ultimately, to make a long story very short, there was a lot of tension within the board because he was really aggressively pushing this. But at the end of the day, the board had to be good fiduciaries and say, wait a minute, this is not in the best interest of the organization. Right. It's in the best interest of you, Mr. Board Member, but not the organization, so we can't do it.
Wow. It's a fascinating thing because when you marry the two examples of being a parent and then you add that word steward, you're stewarding an organization outside of yourself for the betterment of your community to achieve mission, vision, and value. That's really an important distinction. And kind of the way you described it to me, it makes it seem like it's a roadmap for individuals as well as the board in total to move forward. Right? I mean, it's really it's a guiding principle that where everything should start. Wouldn't you say that?
It is absolutely a guiding principle. If board members show up to their board with the idea of, I'm the parent and this organization is my child. Yeah. And if I take that very seriously, like I would if this organization was a minor child, and I ask all the questions I would ask in the best interest of my minor child and make all the decisions, then you're going to be a good steward for that organization.
Right. Another area where I find it's fascinating is when it comes to budgets. And we've already discussed in another episode about how budgets in the nonprofit world versus the for-profit world and accounting in general can have different vocabulary. It can be presented a little differently. Still navigating from the basic general accepted accounting, GAAP, the GAAP rules and the procedures, but still there's just a little bit of nuance. And even though that's the case, I find that board members are hesitant to ask questions. And I've got to believe this falls back to their ego, is that they don't want to appear like they don't know, and they're afraid to ask a question necessarily. So talk to us about the budget questions that we should be asking.
So I love that question. And I agree with you that sometimes they don't ask because they don't want to be embarrassed or seem like they don't know. Let's go back to my Enron example too. Yeah. Look what happens when you're too embarrassed to ask the right questions. So when I talk to boards or do board training, I like to tell them they need to ask who, what, when, where, why, and how. Those are the questions. And again, comparing it to being a parent, if you have a teenage child and that teenager wants to go out on Saturday night, You're going to ask your teenager, who are you going with? How are you getting there? How are you getting back? What time are you leaving? What time are you getting back? What are you doing? Why are you going? These are all the normal questions we're going to ask our teenagers. And the same is true for a board asking questions to a nonprofit executive director. What are you doing? Why are you doing that? How are you going to make it happen? How are you going to pay for it? How is that going to impact the organization? Who are you doing it with? Are you partnering? Do you have the staffing to do it? All of those same questions you'd ask your teenager, you ask your executive director about their programs and their budget.
I love that. I mean, when you say it like that, it makes it more logical, and also it goes back to the fiduciary responsibility issue. But it also seems to me like it's going to help form better decisions. And one of those things that you talk about are budget assumptions. And if you could drill down a little bit into that, because I admit as a board member, I don't believe I've ever asked that question. What were the budget assumptions? I just take it at face value that this is it. And people a lot smarter than me in accounting and finance have spent a lot of time on it. Just go with it. Bad approach, but I'm witnessing here that this, I think it ultimately is seated in the back of my mind, right? That they wouldn't give this to us unless it was good to go.
So that can be true, but it isn't always true. So again, from my own experience prior to working for Chazin and Company, when I worked for other organizations, I've worked for executive directors who were brilliant people, but they didn't really understand money. And so I would put together a budget, being very conservative with money, and present it to the executive director, who would mark it up and make changes. And of course, great executive directors are typically sales type people. So they're very positive and optimistic, not always realistic. And so, he or she, whoever I was working for, would change my numbers and increase the contributions and decrease the expenses. And
Sure.
we would bat it back and forth. Now, oftentimes the final product was something that I didn't agree with, but my executive director was my boss and ultimately responsible for this.
Correct.
So if he or she said, well, I appreciate that you don't agree with it, but this is what I'm presenting to the board.
Interesting.
Now, as a board member, you can understand that those assumptions, people smarter than I am have probably looked at this. Not necessarily. In my example, the EDs, and not all of them, but a couple, were very brilliant, just not with money. But yet they were making that, overruling me and making that final decision. And in those cases, I needed board members to ask questions, right, because some of the contribution assumptions were overly optimistic.
Amazing, amazing lens that you've just given us to understand what ends up on the conference table. That's an amazing trajectory, and for us to understand how that data and how that budget gets to us, I would imagine 95% of the board members sitting around that table have no idea what the process has been, right?
They don't. I agree with you that they typically don't, nor should they really. I mean, that's the weeds that the executive director is responsible for the processes. And certainly on the other side of the coin, you've got some executive directors who really understand money and they have a tight grip on it. And what you are seeing, it has been vetted and is pretty realistic. It just depends on your executive director. It can go the other way as well, where they're presenting something unrealistic. Right. And part of feeling comfortable asking questions is going to be what we call in accounting tone at the top. So the chairman of the board needs to set the tone that questions are okay and expected. And furthermore, and let's go back to parenting. If your child is in a school and the principal does not support the parents asking questions, and the principal does not support parents getting involved in their children's education, are you as a parent going to go, okay, I guess I won't say anything then? No, you're going to say, this is my child. I'm invested in their education. I don't care, Mr. and Miss Principal. I'm going to ask questions and I'm going to get involved.
Right.
Board members need to take that same attitude to their board responsibilities, even if there's this environment of, just take the information that's given to you and don't say anything.
Yeah.
No, you have a fiduciary responsibility. You certainly wouldn't do that with the principal of your child's school. Sit back and
No,
say,
and I sure appreciate that you brought up tone at the top, because it seems to me like that's the time when you lead in and you say, you might remind your board, this is what a fiduciary responsibility is. This is why we need to ask questions. It's okay. I also see too many of these during budgeting. It's put on the agenda with a lot of other things, and then there's a sense, come on, we got to get through this because we got to get to other things, versus no, this is the most important thing we have to talk about. It's how you do layer in not only what your stewardship is, but what the value of this information and robust discussion is to the organization. Another thing that you've talked to us about, and I'm really interested in hearing more about this from you, the issue of controls. We hear that word a lot, and I would love it if you would start by explaining to us what a control is, and then how do we as board members engage in that process? Like how can we ask the right questions so that we understand how controls are functioning?
Yeah, great question. So controls exist for a number of reasons, but I think one that most people can understand is controls exist because organizations are made up of human beings, and human beings are imperfect. Even very competent, uh, greatest of all time accountants or EDs or whatever it is are imperfect people who make mistakes. So at its best, internal controls are set up to either prevent mistakes or catch mistakes.
Okay.
So, for example, a bank reconciliation can be a control. Now, if I'm the person who is paying the bills and putting all the money in the bank and doing the bank reconciliation, that's not a really good control, because if I'm dishonest, I can be fudging numbers. Or even if I'm not dishonest, I can be making mistakes. So a better control would be, and this depends on your staffing, the ideal control is one person pays the bills, one person deals with the cash receipts, and somebody else does the bank reconciliation.
Interesting.
Lots of times organizations don't reconcile their bank accounts every month. And that's a huge control weakness, because that's going to find the mistakes. If somebody forgot to record a check or forgot to record a deposit, that's going to come out in the bank reconciliation. So it helps with the mistakes. The other thing it helps with is it helps deter fraud. Now, it can't stop fraud. There's lots of things involved in fraud. So if somebody wants to be a fraudster, it can happen. But it helps mitigate that risk. Now, how I always put it, because I like to put a positive spin on it, when I was a CFO at a nonprofit organization, my first day, they handed me an organizational credit card. And I said, I don't want it. And they said, well, why not? You're going to have to spend money for the organization. And I said, because I pay the bills, I deal with all the money. And if I have a credit card, I can be put in a position where you're pointing fingers at me. And I don't want to ever be put in that position.
Interesting.
So let me use my personal credit card if I have to buy something for the organization. And let me submit receipts and an expense reimbursement request to the president, who will review what I did,
Yeah.
sign off on it, and sign the check. That way, you can never point fingers at me.
Mm-hmm.
And so that's the other purpose of controls, is to stop or protect people who deal with the money from having accusations thrown at them. If
Right.
controls are in place to stop that, or for it to never happen,
Mm-hmm.
they don't have to worry about that.
It's such an interesting thing. Now you talk about the difference between internal and external controls. So if we're looking at, who we have on our team and what they're doing and the roles and responsibilities, what does the external component of that look like?
Well, and that can mean different words to
Okay.
different people. So the auditors would look at that as
Okay.
an external control,
Okay.
is something like a loan statement that comes in every month, so that the accountants in the organization can look at their loan account and make sure it balances to what the bank says that they owe. Or similarly with the bank reconciliation, the bank statement is something from an external party that the organization can look at their books and make sure that they agree with the external party.
Right. It's such an interesting way to be looking at something up front in a positive way, so that you're not scrambling trying to fix a problem, right? I mean, a lot of this is uh, pre pre protection for the whole organization, right?
It is, and I have seen many organizations who don't produce monthly financials except once a year.
Ooh.
So then you're scrambling, to your point, because along the way, the organization isn't reconciling their bank accounts or their investment accounts or their loan accounts or whatever it may be. And then 12 months later, they're trying to do all this. Well, if errors or theft or anything, and I don't mean internal theft, I mean, maybe somebody got their bank account and routing number and stole money from them.
Right, right.
They're not going to know that in a timely manner.
Right, yeah.
And if you don't report that stuff to your bank in a timely manner, they may or may not reimburse you for the theft.
Right, right. Part of this, and it seems to me when I first started out in board service, there were so few policies that we had to execute or even discuss. And it seems like this is changing more and more. We're getting more and more policies, and they're kind of deepening the conversations. However, I have to say, I feel like a lot of policies just get signed off on without any discussion. And I know that you probably have some ideas to help us through that. So if we could kind of shift a little bit and talk about those policies and why we need to be talking about the ecosystem of the policies and why they're there to support us.
Well, there are some policies that are really unique to the internal workings of paying bills and receiving cash. And those policies don't necessarily need to be elevated to the board level.
Okay.
Except for one. Because in any organization, you have your executive director who probably has an organizational credit card, who is on the payroll. And those types of anything related to the executive director, there should be board involvement. So if the executive director is charging on the organization credit card, or if they are using their own credit card and submitting for expense reimbursement, a board member should be reviewing that to make sure that it's proper. Or if the executive director receives an increase in pay, that should come from the board. And whoever is doing payroll should never, ever, ever increase an ED's pay unless they have something in writing from the board saying, do this. So those are some of the internal transactional controls, just a couple, that a board would be involved with. Other than that, this is really in the ED's wheelhouse because you've hired that person to run this organization.
Right.
There are some policies that do relate to the board, such as conflict of interest.
Hmm.
So the conflict of interest goes back to the parenting thing.
Yeah.
It goes back to the example I gave about the investment broker who wanted to put the organization in a bad investment. The conflict of interest is letting board members know you're a parent, you got to do what's right by the child, not you. That's essentially what it is. Which does not mean you cannot do business with the organization. You can. If this individual, this investment broker, had come to the table with a really solid investment,
Hmm.
the board could have discussed it with him out of the room
Right.
and made this, and he can't vote, he has to recuse
Right.
himself, and
Right.
made the decision. Yeah, let's let him have this business.
Hmm.
So conflict of interest doesn't say that you can't, as a board member, do business with the organization. You can. You just have to be transparent, and it has to be approved by board members other than you, the board member.
Hmm.
There's a whistleblower policy the board needs to be involved in, because if you have an employee who thinks something's being done wrong and that employee has elevated it within the organization and is getting no action, there needs to be somebody outside the organization, oftentimes a board committee or somebody like that, that employee can go to and say, this is wrong and it's not getting any attention and no one will listen to me.
Wow.
So that's a whistleblower policy that the board needs to be involved with.
Hmm.
And those types of policies are asked about on the 990. So there's a
Right.
misconception out there that the IRS requires these. No, they don't. They ask you if you have them.
Right.
Now,
Right.
some of the reporting agencies like GuideStar or Charity Navigator may or may not indicate in their summary that an organization has a whistleblower conflict of interest or whatever. So the IRS doesn't require it, but if donors or grantors are looking at your organization
Yeah.
and they don't like the fact that you don't have this, you might be risking some funding.
Well, and I think those are questions that the board members need to be asking. Do you have these policies? Are they up to date? Where are they held? How are they accessed? I mean, again, going back to the tough questions that a parent needs to ask, and I think it's really an interesting way to be looking at this. I also want to touch on the concept that I find it fascinating that this discussion a lot of times is emanating from the accounting finance department. And I think you just kind of made the link for me, and that's because the IRS 990 is, if you will, tracking it. They're asking about it, and so maybe that's why we're getting more push and direction from our accounting finance teams than we normally would.
Yes, and the auditors will also ask about it. So what I've seen, like with respect
Interesting.
to the conflict of interest policy, typically the ED's assistant might handle that, reach out to the board members, get them to read this and sign this, etc. But then at year end, when it comes time for the 990 or the audit, it's the accountants going to the executive assistant and saying, hey, do you have these documents
Yes.
signed? What's going on?
That's interesting. And again, that helps draw that line to figure out where on the journey are we, and how is this being administrating administrated. Um,
Well, let me just respond to that
yeah.
really quickly, because ultimately accounting is like, or budgeting is like losing weight, is what I like to say. So
Yeah.
when you're doing a weight loss plan or eating healthy plan, right? Everything that goes into your body ultimately affects how your body runs and comes out.
Hmm.
And the same is true with accounting. Accounting is taking in everything an organization is doing, because
Hmm.
everything it's doing has a financial consequence, everything
Yeah.
it's
Yes.
doing. So accounting takes in everything an organization is doing, and then it comes out in the form of financial reports.
Hmm.
So garbage in, garbage out.
Right. Right. And that's a fascinating kind of way to think about this, especially if you might be a little challenged or uncomfortable asking a question. because financials are overwhelming. I mean, for a lot of people, they're put on boards because they might be a super whiz at a certain thing, but it's not always that they come from the accounting or finance world, and yet
But they
this.
don't have to be overwhelming. And that's what excites me,
Okay.
is to make financials not overwhelming.
Mhm.
Financial statements are common sense. They're nothing more than that. Now,
Okay.
from a board member's perspective, or from my perspective as an accountant, there are nuances in a financial, generally accepted accounting principle nuances that for an accountant makes them a little more complicated. But board members don't need to fly at that level. They need to fly at 50,000 feet and they need to use common sense. That's all financials are, or common sense.
Mhm.
If the scale isn't going down when I'm eating healthier, the question that I should ask myself is, how many brownies or ice cream or whatever did I have last week?
Right.
Let's be honest, because the scale is indicating I wasn't eating broccoli and apples. It's indicating I was eating something else. The
I love it.
same is true with financials. If board members are seeing revenue go down or expenses go up or whatever it is, they need to have common sense and go, what's going on with the revenue? Why is it going down? You don't need to be an accountant to see the trend line is coming down.
Right. Before we let you go, you talked to us about being a parent, being a good steward, asking the questions, drilling down on some basic things. How does LeBron James fit into this?
I love this. So this fits into the question or the comment you just made, that financials can be overwhelming. So to help boards understand financials at a 50,000-foot level, I compared them to LeBron James.
Okay.
So you have two main financial statements. In the for-profit world, people think of them as the balance sheet and the income statement. In the not-for-profit world, they're called the statement of financial position and the statement of activities.
Mhm.
For this conversation, because most people know the term balance sheet and income statement, I'm going to use those terms, even though they're not technically correct. So the income statement is LeBron James' season this year.
Uh-huh.
So LeBron James played basketball. He had a season. He had season stats. How many points did he put on the board the whole season? How many dunks? I mean, I don't know my sports, so I'm making this up here. How many defensive moves, whatever.
Yeah.
LeBron has his stats for the
For
season.
the season.
At
Yeah.
the end of the season, those stats will be zeroed out, so that next season LeBron is starting all over again with a new season and new season stats.
Yeah.
So the question is, when those stats from this season are zeroed out, where do they go? They go into his career or lifetime stats.
Mm-hmm.
So they become part of all the stats that he's accumulated over 20 years, however long he's been playing basketball.
Yeah.
They become a part of that.
Yeah.
The income statement is LeBron's this season's stats.
Interesting.
How did the organization, or how is it doing this season?
Mm-hmm.
At the end of the season, which is also called the fiscal year or calendar year, if they're on a calendar year,
Right.
the end of the season, the income statement will be zeroed out.
Mm-hmm.
Where does it go? It goes into the balance sheet, which is the lifetime stats. That's LeBron's lifetime stats. Now, the accountants out there who are watching this may get a little bit angry with me and say, well, it's way more complicated than that. It is. But if you're a board member who really doesn't understand any of this,
Mm-hmm.
understanding financials relative to LeBron James' career is going to help you understand them enough to ask the right questions and be a good steward.
I love it. I think that's great. Okay, so I'm a basketball fan, so I will tell you that made total sense. And
Okay.
yeah, I mean it's just fascinating because you're right. As a board member, it's not necessarily that month that you should be worried about. It's the trajectory, and again, to use that word, the arc of the organization. where you're going, how you're being led, what do you jump ahead of so that you protect that falling revenue, or you look at that longer term piece so you can be a better steward.
Well, and to your point, going back to LeBron, if LeBron has a bad game this season,
Mhm.
well, that stinks. But you're not just going to look at that one bad game and go, LeBron's a terrible basketball player.
Right.
You're going to look at that bad game relative to his whole season this
Yeah.
season. And
Yeah.
maybe he had some fantastic games, and hopefully he had more fantastic games than bad games.
Right.
So that's true with your month by month financials. An organization might have a really bad month.
Mhm.
But if overall they've had a good year to date, just like overall LeBron's had a great season to date,
Mhm.
you don't need to worry about that one bad month.
I love it. Well, Jackie, you're just amazing, and I love how I say this all the time to you. I think privately and publicly, when we're working together, you really make things a lot more logical and approachable, and you eliminate some of that fear and stress. Because at the core of this, if we're not asking questions, we're not leading.
That's right.
We're just, if we're rubber stamping, then we're just taking up oxygen around the table. So
And you're not fulfilling your fiduciary responsibility.
exactly. It's
Mhm.
it's so true. Well, Jackie McLaughlin, CPA, Quality Control and Learning Manager for Chazin and Company. Jackie's been on the Counting on Chazin series quite a bit, and so you can check out some of her other episodes where she's spoken to us about a myriad of topics that really are important for understanding how to work with your nonprofit. Chazin and Company works throughout the country. They have a lot of different specialists that can help nonprofits achieve their mission, vision, and values. What's so interesting about Counting on Chazin is that this is an opportunity to get information from great thought leaders about accounting and finance, and you don't have to be one of their clients. They've made this an open environment so you can go on and learn what you need to at the time that you need to. You might need to revisit something, you might need to share it with your board or people on the committee, but it's just an amazing tool to help us really, I would say, Jackie, elevate our game so that we can be good stewards. It's just an amazing
Yes.
thing. It really is. Well, this has been another episode of Counting on Chazin. Again, you can find us directly through countingonchazin.com, or you can go through the chazinandcompany.com portal and learn about what they're doing and how they're doing it and where they're serving nonprofits across the country. Okay, Jackie, love basketball, love the nonprofit sector. What could be better?
Exactly. And parenting.
And parenting. Oh, yeah. Hey everybody, thanks so much. We can't wait to see you on the next episode of Counting on Chasing.
Thank you.
Thank you.